So, lots of people are bracing themselves with a savage 15 billion tax grab on your pension. So Rachel Reeves has called the current system unjust. So they could raid the pensions of high earners by axing lucrative tax relief in the next month's budget, a Wall Street bank has warned. Goldman Sachs said Chancellor will need to raise taxes at least 15 billion to 20 billion in October's budget, with pensions likely to be a huge target. So the investment said that imposing a flat rate of 20% relief on pensions contributions would plug 15 billion of the deficit in Britain's finances. It said that a small measure could add up to a sizable tax grab by Miss Reeves. Pension tax relief is known to be an area Miss Reeves, as well as other chancellors, have considered cutting to raise revenue. So this was something she did in 2016. So she will give a flat rate of pensions tax relief of 33%, therefore taking 7% from the high earners and giving it to the basic rate taxpayers. So it says here, welcome boost for basic rate taxpayers and a cut in the savings subsidy for higher earners. So Keir Starmer has already admitted that the budget will be painful, but not everyone will feel that pain. In a statement last month, Labour ruled out increasing taxes on working people. Well, what is the definition of working people? I think the definition of working people is anybody who is earning minimum wage or less, or is a union member, or is in the Labour Party. So here's a graph here that another thing is that because the tax relief for getting earnings will not go up in line with pensions, then lots of pensions will be taxed from the state. I mean, this is effectively ludicrous, because pensioners should be protected. If they're well and able to work, they should pay the relevant tax. But I think having a pension which is paid out and then you pay tax on it, I mean, you should probably pay tax on your other pensions, but effectively you're going to have to sort of pay a lot of tax, which would either come from other pensions you've accrued, savings, or the state pension. To address the 20 billion bill, the bank said that the Chancellor would likely scrap certain inheritance tax reliefs, reform capital gains tax, and alter tax reliefs on pension contributions. So savers currently enjoy a 20% tax relief on pension contributions, with an extra 20% available for higher earners. A flat rate of relief would effectively abolish the additional relief. Now, I've also heard that also you can take money out of your pension pot. I think it's 25% tax-free. And I think that there's going to be a ceiling on this. It's either 100,000 or 150,000. So raising capital gains taxes to be equal with income tax, which I suppose is fair, but you don't have the risks, and people who don't have a job usually have the capital gains. In addition, additional revenue for the excess, according to Treasury Analysis. Scrapping inheritance tax on relief over estates worth under 325,000 would raise 1.8. Scrapping inheritance tax relief on estates worth under 325 would raise 1.8 billion. Well, that's not good, is it? In an interview with the Sunday Times in 2026, Miss Reid was asked which aspect of the tax system she would change and said, pensions tax, I would make it fairer. Pensions tax relief seems to be geared towards the highest earners. Well, you're paying the most tax, so why shouldn't you get the main relief? If you're not paying a great deal of tax, why are you getting more relief? And the scrapping of inheritance tax relief on estates worth under, I don't know. I mean, the thing is that that means that everybody has to pay. That's a hard nut to crack. She Reeves wrote in an article in the Times 8 years ago that the current tax relief system was an unjust and ill-judged use of the nation's strained finances. Well, it's not yours until you pay the tax. And the flat rate of 33% would boost the pension pots of someone on the average wage, only if it's invested in the right thing and not with a lot of these basic, simple pension funds, which ironically don't even invest in the best countries, let alone sectors. I mean, some of them haven't even invested in the NASDAQ and Standard and Poor when we've had such meteoric rises this year and last year. So, and a flat rate of 33% would boost the pension pot of somebody on the average wage by up to 15,000 over their working life. She said it would be simpler, fairer. Well, not sure about simpler. I mean, it's just a calculation that's made. And an important step towards boosting retirement savings. Well, not on the middle income. It's a squeeze on the middle income who pay more tax than the lower income, but get squeezed. And then the problem is that they don't want to, the lower paid in retirement will have a better standard of living than the middle class. This would be a welcome boost for basic tax rate taxpayers and a cut in the savings subsidy for higher earners, while still rewarding savings, but only if they are properly invested. There needs to be a raid on those funds which have high yearly costs, have high ongoing costs, and are repeatedly in the lower quartile, or they don't actually match what should be a decent amount. So tax relief could be rebranded as government-backed savings schemes. Well, that's a bit hilarious. For every £2 that savers put towards their pension, the government could contribute another £1, a huge incentive to save for everyone. Well, I mean, we need to save because the government will see this, that over time, they'll get receipts from investment companies, they'll get receipts from continually playing with the pension system. So this would see, you give with one hand and you take with the other. And just because former Chancellor Rishi Sunak and George Osborne, among those to have reportedly considered a flat rate pension relief. So it's not going to be favorable, where it's like most of these taxes, and you say, well, somebody earning £50,000 probably pays 3 times somebody on minimum wage. And when they say, oh, look, I'm not getting any money back, because they haven't given any money in tax through their earnings because they're on the threshold, or it's barely enough. It's when you earn that more money and you reach the past your yearly allowance into your 20% and then into your 40%, where you start paying serious amounts of taxation. So please, can you comment on this video? Can you please support the channel by subscribing and clicking on the bell? Can you support it also by sharing it with your friends and family so they get to know all this information about the potential likelihood of what is happening with their money? If you found this video interesting, please can you sponsor me and other channels that I have? Shouldn't cost too much, and information will be in the show notes. And please, if you found this video helpful, can you donate? Also, information in the show notes. So please, can you investigate this further about how you are going to potentially be affected in the October budget, which is on Halloween Day, which was probably chosen on purpose. And please, can you support me? Thank you very much, and see you on the next one. Bye bye.